Today we're sitting down with Craig Johnson. Craig Johnson is with the Streamlined Sales Tax Governing Board. He has been its executive director for 12 years. Prior to that, he was with the Wisconsin Department of Revenue for 24 years. So he's got substantial tax background, and I've actually met with Craig a couple of times to discuss the Streamline Compact and how Louisiana could be part of it. Streamline is a compact of states and an agreement that's shared between those states to allow for simpler compliance for sales tax processing for businesses. So I will go ahead and turn it over without a whole lot of ado to Craig, who's got a great presentation for us today, so that we can begin understanding what Louisiana would have to do to be compliant and considered an easy state to do business in. Hi, Craig. How are you doing today?
Good. How you doing, Julie?
Great. Been a long time no see, but glad
It
to have
has.
you back.
All right. Well, I appreciate it. And I appreciate the opportunity to talk with you folks today about, remote sellers, the streamlined sales tax, the Wayfair decision, some things that have been happening federally, some things that could continue to happen federally, and then some suggestions for, things that Louisiana might want to consider to make sales tax collection easier, or like I like to say, less taxing. As Julie said, I'm I'm the executive director. I've been here now for it's going on 12 years with Streamline. I was with Wisconsin 24 years prior to that, and was instrumental in helping Wisconsin draft the legislation so that we were able to join Streamline back in 2009. So some of you may be more familiar with what we do and why we're doing it than others, as well as with the Wayfair decision. I think a lot of people now have heard about the Wayfair decision, but do they really understand it, what it said, and also, I think more importantly, what it didn't say. So I'm going to say, if you're familiar with some of those things, please bear with me as I kind of provide the background, because I do think it's important for people to understand what the governing board does, how we operate, what our goals, what our aspirations are, and what things we're still trying to accomplish. I have enough. If you looked at the PowerPoint, I've got enough slides for several hours, but and I wanted to at least provide them to you, so you had them for, if nothing else, as a resource. And as we start, or if we start bumping up on the hour, I can certainly stop and make sure that you have an opportunity to ask questions. And I would also say, always feel free to reach out to me at any point in time directly if you've got questions about Streamline, things that we're doing, things that may be beneficial for Louisiana. Let me jump over onto the next slide. So as we talk about this, and what I want to talk about today is getting you some background understanding of Streamline, what it is, what we're trying to do, and again, information about the Wayfair decision and remote sales tax collection overall. So let's just start with a basic. What is Streamline? Why did we begin? What is this all about? And if you turn the clock back to 1999, and it was National Governors Association, the National Conference of State Legislatures, the Multi-State Tax Commission, the Federation of Tax Administrators, as well as the business community, came together and said, hey, look, we've got a complex system when you look at each state's sales tax system standing on its own. And we need to figure out a way. And the direction that was given by NGA and NCSL was to come up with some solutions that address the complexities that multi-state businesses face. The unlevel playing field for merchants. Keep in mind, in 1999, remote sales were starting to pick up, but your brick and mortar stores were all collecting tax. And what was the most popular advertisement you saw when you looked online? No tax, right? So everybody thought they could avoid the tax by buying things online. And your brick and mortar stores, I mean, it put them into an unlevel playing field situation. And then the states also knew that they were losing a lot of revenue with respect to the remote sales, and as e-commerce continues to grow. And again, who would have known that e-commerce would be where it is today? Back in 1999, the way it's grown, and where would we be if e-commerce wasn't being taxed at the time the pandemic hit? We would be in a tough situation. So when Streamline operated, we operate and at the beginning, and we operate the same way today. And we really have four main goals or principles that we operate under. And one is obviously developing a simpler system. when it started, it was more of a let's wipe the slate clean, let's learn, let's use what we've learned over the last 40 to 50 years, and come up with the best solution that we can. If there are things that we can't make simpler, at least make them uniform, because the uniformity in and of itself, especially for multi-state businesses and now for remote sellers that maybe have had no contact with your state, but now they're shipping products in, and because of Wayfair, now they need to collect. So that uniformity in and of itself is a form of simplification. One misconception about Streamline, and one of the things that we are very careful of, is protecting state sovereignty. We do not tell states what to tax and what to exempt. We think that's the right and responsibility of each of the state's elected officials. And Julie, I know when you were in the legislature, I'm sure you would not have liked it if Streamline came in and said, Julie, you can't tax that. That's something that the legislatures, our elected officials from each state, want to and should have the control over. So that really gets into the state sovereignty. So we have to try to balance that state sovereignty and simplification and uniformity, because every time you, when I say you create uniformity and you say it has to be done this way, you're moving a little bit further away from pure state sovereignty. But the more you're moving towards pure state sovereignty, the more complexities and the more differences you're creating. So finding that right balance is and was extremely important. And then obviously using technology wherever we can to make things easier. And as we know, I mean, technology changes so fast, and solutions are developed over things that people didn't even think was possible for computers to take care of. And now they're doing. And you think about where things are going with AI and some of that. And so it still continues to evolve. So with these goals in mind, we had discussions that went on for several years throughout the country, having discussions on ways to make things simpler, ways to make things uniform. And it all started though, really because of two Supreme Court cases, National Bellis Hess and the Quill decision, which both basically said, look, states, your systems are so complex that we are not going to require a seller that is not physically located in your state to have to collect and remit your state's tax. In effect, you're putting, and under the Commerce Clause, you're imposing undue burdens on interstate commerce. So Streamline's goal was to address those things that created those undue burdens and eliminate them, and then in effect get the Quill decision overturned. I mean, that was when Streamline started, that was the goal. So who's involved with Streamline? So first, let's talk about the states, and really our governing board states. But I will say that when Streamline first started, every state with a sales tax except Colorado, and this includes Louisiana. In fact, I went back and I looked at your authorizing statutes that are still in place, that allow Louisiana to participate with Streamline and participate in these discussions. But every state with a sales tax participated. Once the agreement was drafted and put together and approved in 2002, it became effective October 1st, 2005. And at that time, there were 18 states that were able to pass it, and they had the horsepower to get it through their legislature. To date, we have now 23 full member states that have passed all the legislation necessary to comply with the agreement, and we have one associate member state, which is Tennessee, and they've passed some of the provisions, but not all of them. In addition, with respect to the state participation in Streamline, we have what we call a state local advisory council. And this is made up of every state that's a governing board member. It's also made up of every other state that is still a participating state. So Louisiana is still technically part of the advisory council because your statutes, your legislation, your law that authorized the Department of Revenue to participate in this are still on the books. So we want as broad an audience as possible as far as member states and non-member states participating as we work through various issues. And most of the issues get brought to us by the business community, pain points and things like that they've identified. And then this council actually reviews it. I'm going to say they're really the workhorse of the organization. They get into all the weeds. I also say they get into the roots of the issues, and then they bring forth amendments to the agreement and solutions that are being proposed to the governing board for, in effect, final approval. In addition to the states, we also have the local governments, and obviously that is something that's extremely important in a state like Louisiana, where you still have a lot of local local government control over your tax impositions, your tax collections, and things like that. It also is one of the things that leads to the complexity, unfortunately. I mean, I won't pull any punches. I will tell you the way that I see it. But we do have a local government advisory council, and they are still very active with us. And from my perspective, because of the uniformity requirements in particular between the state and local governments, it was and it continues to be extremely important for the local government organizations to be participating with us so that we can take into account, any concerns that they have and understand from a local government perspective, what would be the effect if Amendment X or Amendment Y was passed. And this includes, so we've got the U.S. Conference of Mayors, the government finance officers, National League of Cities, National Association of Counties. They all participate with us. I will say that the local government participation has, I'm going to say, dwindled over the last several years. Part of it is because I think we're not doing a lot of things that are going to adversely impact them. And that's the thing, is I don't want them just to participate because something's going to be bad for them. I want them to make sure that they're helping us find the solutions that we're looking for. But in addition to the government side, and when we're talking on the state side, we're talking the tax administrators and the state legislators that are involved. So we have membership from both. But then we also have the business community, and this really, from my perspective, is probably one of the most important pieces of Streamline, and that's led to the success of Streamline. Um, Multi-state businesses are really in the absolute best spot to identify the pain points related to sales tax compliance and sales tax administration. I'm going to say I've cultivated some very strong relationships with various business organizations, created a lot of trust where they've been willing to tell me, hey, look, this is how these processes actually happen. This is the problem that it creates, without them being concerned about any sort of retribution or anything like that. That, oh, if we tell them this, then all of a sudden the states are going to go start looking at, they're going to go do audits in an area and things like that. We don't do that. And in fact, in many cases, I will have offline conversations with business community members that will share concerns, share ideas, really explain in detail the problems that existing policies or procedures or laws are creating. And then I will bring it forth to our group more of on an anonymous basis, so that we can have just an open and honest conversation about, look, here's the reality, here's how things are happening, and let's find a solution to it. We take into account the comments from the business community. I mean, we hold those to the highest standards that we can. We are fortunate that, like, the Council on State Taxation, a number of individual accounting firms, small and large, as well as a number of businesses. We have, and it's no secret, Amazon participates in Streamline. Amazon is very interested in what's happening in Streamline because they, in effect, have to collect in every state, every jurisdiction around the country. So uniformity is extremely important to them. And even though, and myself included, you think about them as they are so big, they've got the people, they've got the horsepower behind them to be able to comply with literally everything. It's not true. There's still things that make administration and compliance extremely difficult for them, and it makes it more difficult the less uniform that it is. So we are very, very grateful for those relationships. And the reality is, it doesn't do any good to impose or enact some sort of sales tax law if businesses can't comply with it, or the compliance costs so much more than the benefit they're going to get out of it. Chances are they're not going to comply. You're going to have to go as a state and go out there and actually say, okay, here's the dollars you owe us. And the way you do that is through audits. And the reality is, it's not an efficient way to do things. So by working with the business community and finding ways to make it efficient for the businesses to administer it, as well as for the states to be able to administer it, just makes, to me, it makes all the sense in the world. So this is a map of our current system, or our current state membership as of July 1st. All the turquoise colored states are full members. You can see Colorado, the only white state that's on there. They are still they had their home rule state similar to Louisiana, but they had some Tabor laws and things like that. So they have never really participated with Streamline. all of the other states, obviously you have the non-sales tax states, your Oregons, your Montanas, New Hampshire, Delaware, and Alaska, although Alaska does have some local taxes. So they obviously don't have and have not been participating with us. Although interestingly enough, they have a strong interest in the program. And the reason is they've got sellers in their states that are remote sellers in all of the other states. So they still have to figure out ways to comply. So they definitely want to know and are interested in making things simpler and more uniform. And all the other states, like Louisiana, Texas, all along there are those, again, they are advisory states. They are part of our state and local advisory council.
Craig, while you have the map up, if you could go back to
Yeah,
it for a second.
sure.
Yeah, I kind of wondered, and I'm sure that I learned this at one point, but I know Colorado's got a very complicated system, and but what what was the story behind the not participating at all? Like,
Yeah, so I mean, I don't know all of the specifics. I think that the biggest piece was they looked at it and said there'd just be no way that we'd ever be able to get into compliance or even to get close. Now,
right,
interestingly enough, I do think that there are things that Colorado has done recently to that are, I'm going to say, somewhat streamline related. I have gone and spoken and testified at the Colorado Sales Tax Simplification Task Force meetings and talked to them about different things Streamline has done, and they've done some of those things too, such as finding a way to register for all of your locals in one spot as opposed to having to go to each local jurisdiction separately and do the registration. So I also think their Tabor laws make it very difficult. So, for example, my understanding is if they're going to change a definition and something becomes taxable that wasn't before, it fell under some other definition or that was exempt, that's going to have to be something that's going to, in effect, have to go to the vote of the people somehow. And so those things are very difficult. Yeah.
that was
So what's
actually
it
part of what
like?
oops, sorry.
No, I was
That
just gonna go ahead, Julie.
No, some of the things I wanted to kind of talk about, which I know there's only a handful of states left that are as complicated as Louisiana, right? You've got Colorado, Louisiana, Alabama,
Alabama.
Mhm.
Yep.
and
And
is that
Alaska's cities as well.
Yeah.
Alaska?
Alaska with their
Yep.
municipal taxes. Yep,
Yep.
exactly. Because they have all different bases. So they don't have, I mean, they do have the Alaska Remote Sales Tax Commission, I think is what it's called now, or Municipal Sales Tax Commission. So they're trying also to do some things to make it easier. But
Right.
yeah, I mean, you hit those states, right? You hit the nail on the head. I mean, those are the states that businesses will say these are the most difficult states to be able to comply in.
So, one of the things there's several things just to kind of give people an overarching view of why Louisiana isn't streamlined. It's, we would be required to have the same taxable base at the state level as in every single parish. And, over time, we've, really developed a situation where we have parishes that can opt in and out of exemptions. Without exemptions, the sales tax base is pretty much all the same. But when we exempt something at the state level and don't force the governments in the local municipalities to either take that exemption, then we create a base. We've even gone a step further at times and said, we're going to give the exemption at the state level and we're going to let the local governments opt in and out. When they let them opt in and out, you get even a lot more confusion happening. So that's one of our things, and we have administration in every single parish, pretty much, as well as at the state level. But we do have that remote sellers commission. The remote sellers commission is supposed to make us streamline, in essence, right? It's supposed to, for all of the remote sellers, make it feel like we're streamlined. And I'm always interested to see, like, where do we stand, with that? How is the remote sellers commission buffering that? What's the perception out there in the rest of the country?
Yeah.
Mm,
And I can just a couple of comments on that. So, again, I do applaud Louisiana for taking some of those steps and trying to figure out ways to make things easier. And even though yes, you have the remote sellers commission, you still though have all of the differences in the bases, so you still don't, you have, that they haven't been helped in that area. Finding a single place to file all your returns, whether you're in state, out of state, that's it, doing the audits. And I don't know if does the remote sellers commission, do they handle the audits, or is it still, some can be on the state, some can be on the local, do you know?
I don't think they do, Jay. I would let Jay probably answer that. She'd know better.
So my understanding is they were going to move in that direction. Maybe they'd even hired somebody and they're coming up with rules. I don't know if they've gotten as far as implementing yet, but that was part of the plan.
Okay. Yeah. Because I mean, that's the thing, is that, yeah, it's great to have it where, and from what I understand right now, the remote sellers can file their returns with that commission. Is that correct? And then that commission distributes the dollars out. So it's
That,
in
that
effect created a single filing location for them.
Yeah.
Yes. So if you are in fact a remote seller, that's great. If you think you're a remote seller and you're not, which happens, it's a problem because you have a different group dealing with actually businesses with nexus in the state. And the other issue, and I don't know if this is going to work this way in the audits, but it has sort of been a little bit this way with the VDAs, is and the VDA process, they don't have a VDA process yet, or they're working on that, or remote sellers, but they've been doing it with the local tax commission. The issue is they still kind of go back to the parishes and they have to approve individually. So you do have, even if you have rules that seem uniform, you can still have different parishes making different decisions about the same rules.
Mm-hmm. Yeah, and that in and of itself is, I mean, that's a tough spot. Again, if you put yourself into the shoes of a business, and I'm guessing that even happens with your own in-state businesses, right? I mean, they're operating in two parishes that may be next to each other. One parish interprets a term one way, one parish interprets it a different way, and expecting a business to know that. Now, again, that's your own in-state businesses. And then now you throw in remote sellers who, up until Wayfair probably knew nothing other than that, okay, we know we get some sales that we ship to Louisiana, and that's all that they cared about, was interstate commerce, didn't have to collect tax, didn't have to worry about anything. And trying to get them to understand, all those nuances with the local jurisdictions, and that it obviously is extremely difficult. And when does something qualify for manufacturing exemption and when doesn't it? Because my understanding is that's one of the things with with the local jurisdictions that people are running into, is different interpretations of what is in manufacturing and what isn't. So those are the difficulties that that sellers are facing, and now remote sellers are facing. And those are the exact types of things that obviously that Congress and others are, I'm going to say, are concerned with, when they're talking about the undue burdens, and from what we hear from businesses as well.
Yeah. Yeah, well, and we have the Uniform Local Sales Tax Board that, is supposed to be working toward ironing out some of those issues between the local governments, where they both think that they can tax a certain item because of, so many things that happen there, like destination sourcing, and, or, just all the different sourcing rules, and, having multiple locations. Where is an item dropped off? Where is it picked up? We really need to be working toward getting all of that resolved, because it's almost like every business that operates throughout Louisiana has got all these different states to deal with. They've got all these different local governments to deal with. And
Yeah.
boy, it really would be nice if we could streamline. Just real quick before we keep going, I just wanted to ask, when I last talked about this, we almost could never become streamlined because we had all these exemptions, the Stelly amendments, and the Stelly exemptions on groceries, prescription drugs, and on household utilities that are all at the state level were very disuniformly adopted at the local levels. And it's protected by the Constitution. So there was absolutely no way to really fix that. Are there ways to work around that at this point for Streamline?
Yeah, yeah, it's interesting. Now, if you said, let's just take food, for example, because you exempt that at the state level, is that correct?
Yes,
It's protected by constitutional, but at the local levels, they can impose their tax.
correct.
Yeah, so we, in effect, each local jurisdiction can impose their own tax rate. That's not a problem because we do that. We are able to handle that through our rate and boundary database. We have put some exceptions in the agreement. Food is one of them. So a state can have a second rate on food, which could be zero. So what Louisiana could do, I mean, and it would be in compliance with Streamline, is say the state rate is zero, there is no tax on it, but locals, you can impose your tax on it.
Yeah.
Now, if they did that, though, you'd need to have all your locals imposing tax on it or none of your locals, right? I mean, so you need to have them all doing that the same way. But and all locals could, and the state could still say, nope, it's exempt from state tax. There's exclusions for the food and food ingredients, drugs, and then there's also some provisions in sections 302 and 308 of our agreement that deal with the rates and the base that in effect push out things like utilities, some of those things that aren't typically sold on a remote seller basis. So we
Mhm.
have made exceptions to that so that states can do, I don't want to say in effect whatever they want, but just about whatever they want to do with those. And part of it is because the businesses that are involved with those types of industries, especially the utilities, right? You got your, I'm assuming you have like a public service commission or something along those lines, similar to what other states have. And they're so involved with how it's regulated that they're on top of it. They know where they're making their transactions. They know the taxes that do or don't need to be collected. So in effect, they've said, hey, look, just in effect, leave our industry alone. Let our
Yeah,
state do it because we've worked it out with the state as far as handling it. So yes,
yeah.
so some of those things have been addressed. The other thing that we have done, and it's later on in the presentation, but we have put together a non-member participating state option, where states, you don't have to go in and adopt all the uniform definitions. You don't have to go in and have all of the uniform bases, some of those sorts of things. And I will get to those slides, to kind of walk through and say, okay, look, if Louisiana wanted to participate, here's what they would do as a non-member participating state. I mean, obviously it puts, I'm going to call it, more burden, more onus on your state, your Department of Revenue to put some of this information together, because you have to explain, here's how we're different than the 24, I'm going to say the 24 uniform states in Streamline. So you have to identify your differences on a taxability matrix and on a certificate of compliance. You'd still have to fill out your rate and boundary, or complete a rate and boundary database and have it, in the same format as all of our other states. So, so sellers can follow that. But yeah, and I can certainly get to that, and we'll jump through some of these slides pretty quick now. We did talk about, things that make the system burdensome, so you got those slides that are there, and I'm not gonna go through each one of those, just again, so that you can look at that. And I guess I would say, think about it from a Louisiana perspective and say, okay, these are the things that the business community has identified as causing us problems, or causing us issue or concern. Which of these things apply in Louisiana, which don't. And I think I'm going to say, unfortunately, you're going to find that a lot of them apply to Louisiana. But there's ways to fix those. And as we went through it, we used all of that information that we gathered from the business community, from the discussions, and that's ultimately what was used to develop the agreement itself. If any of you haven't read it, I say it's a great read. It changes all the time, so you just don't know. Because we amend the Streamlined Sales and Use Tax Agreement since I've been the executive director. I believe it's been all but one meeting we have made some type of amendment to the agreement, and it's things that, because we've learned so much over time, businesses come to us and said, yeah, we thought that would work, but this doesn't, and this is why. And worked through with our states, and we've found ways to make it so that it would work. So we do not see this, and I do not see the agreement as just a static document that, okay, it's passed, it's done. I will tell you, we have been trying, and I have tried very hard since the Wayfair decision in particular, not to do anything in the agreement that's going to require our states to go back to their legislature to make changes. And the reason I've pushed that hard at this point in time, it's not that I'm not willing to do that if I think that there's really something that needs to be done. But I also look at it and say, we've got 24 member states that have done a heck of a lot to make things simpler and more uniform. There's 22 other states with a sales tax that haven't done this, and yet sellers are able to comply, sellers are collecting and remitting. So the question is, why should we do even more? Again, if it's something I look at and go, yeah, it makes sense to do this, then I'm more than happy to, to bring those types of things forward. But we've been trying very hard not to. And these slides, just these next couple, they just touch on what some of the key features are of the streamlined sales and use tax agreement. And one that I just want to talk about a little bit, I've got several slides on, is our certified service provider program, because this is something that I think that if Louisiana implemented, this is something that could significantly reduce the burdens on remote sellers. And in effect, what the certified service provider program is, or what it does, what it allows, is it's really a way for businesses to outsource all of their sales tax obligations. Businesses have been doing it for many, many years with their payroll taxes. They use a Paychex, they use ADP, whoever it may be, and they take care of everything for them. This program is in effect allowing them to do the same thing with their sales and use tax obligations. So these companies, and they're all under contract with the governing board. We go in and we review their systems. We look at security. We make sure that everything is I'm going to say, up to snuff. And then every one of our member states also looks at their system to make sure that it's calculating the taxes properly for their state. So they make sure that the taxability is right. They make sure that they source the transaction properly. If it's an address in the city of Westby where I am, they make sure that it's calculating 5% state tax, 0.5% county tax. So these companies, and they're all private companies, they have built these tax engines to handle the tax calculations. And then we enter into, once all of our states have reviewed them, agreed that it calculates everything properly, we will enter into a contract with them. Once they have a contract with us, when they take their tax engine and integrate it with their customers, there's the sellers' shopping carts, it will take care of all of the tax calculations for them. And it's not just the tax calculations. They do everything from beginning to end. So it's determining taxability, sourcing the transaction. At the end of the month, it's generating the returns themselves, filing the returns for these sellers with the state, all done on an electronic basis. With respect to payments, the CSPs actually make the payments to the states. They get the money in one lump sum from their sellers, as say it's $10,000 it comes to them for the month. The CSPs are the ones that have to split it out between each of the states and make each of the remittances to the states. They also take care of any of the notices, any of the audits that are done on behalf of these sellers. So if a seller is using a CSP and they get notified for an audit, first of all, our states will go to the CSP. They will not go to the seller. The CSP is the one that's responsible for it. The CSP in turn, though, may have to go back to the seller to get additional information, depending on what information was passed and what wasn't. But there's a whole testing process that we go through with them on an ongoing basis. We test them, and I'm going to say our states test the heck out of their systems on a quarterly basis, and they can test as many transactions as they want to make sure that everything is staying correct and it's still doing the proper calculations for them. Now, all this obviously comes with a cost. So the question is, how do we pay them? We let them keep a percentage of the tax. If they remit $0 in tax to a state, that state pays them nothing. If they remit $1,000 in tax to a state, they're allowed to keep 5% of the tax. And the state doesn't write them a check. They file the return. They show there's $1,000 of tax due. They take off, and there's a line right on our simplified electronic return where they subtract the $50, the 5% of the tax for the compensation, and they remit the net $950 to the states. Our states did not want to, and I still believe it's the right answer, which is we aren't going to write checks out to the CSPs. They can keep some of the tax dollars after they're collected and when they file the returns. So no dollars collected, no payments to the CSPs. And one of the things that the agreement required was that any compensation had to come entirely from the money that these sellers collected. And that was the biggest reason why we set it up as a percentage of the tax itself.
Who,
Now,
our remote sellers board, uses a software, and I'm not really sure what software they use, and I don't know if you guys are, but is it one of the CSPs or is it another software?
I do know at one time they were talking with Avalara. I don't know if ultimately Avalara is the one that they use, but I think they're using them primarily for, I could be wrong, but I think it's primarily for the rate and jurisdiction databases and determining, I'm going to say the rooftop location. I don't know that they're necessarily going in and doing anything specifically with taxability of products in each of the jurisdictions.
I feel like they contracted with, there's a group of companies that also do contract audits. And I'm blanking on who they are, but I feel like they're out of Texas and that they ended up going with one of their affiliates.
Okay.
So
So that's to actually handle the audits that are done then? Is that what?
it's a different affiliate.
Okay.
I believe that is handling, or different affiliates, I don't know how many they have, but that are handling audits and doing different things for particularly the local jurisdictions. But I think it was one of their affiliate software companies that basically they contracted with.
Okay. Okay. Yeah. So
I'm saying
those,
Avenue Insights, maybe. I'm trying to remember the name.
doesn't
Yeah,
sound familiar to me. But
yeah.
Yeah, it would be handy if it was a CSP, but
yeah. And the thing is, I know that the CSPs are more than willing to work with the states. They set up an association, the National Association of CSPs. So yes, they're competitors, but they also want to work with the state and say, hey, look, let's figure out a way for you to contract with us, just like the Streamlined states do. So that when there's sellers that are located, let's say they're located in Wisconsin, where I am, making sales into Louisiana, um, you're in effect going to compensate the CSP, but they're going to take care of doing those tax calculations and remittances for you. I can tell you that I know from my conversations with our certified service providers, at least in the past, that there are sellers that are out there saying, we're willing to collect the tax as a remote seller in any of the states where there's CSP services are offered. If the CSP services are not offered, our head's staying down. We are not going to collect that tax because of what it's going to cost us. So I think that it's something that I would strongly encourage you, and I'd be glad to help coordinate some of that, as far as trying to get the CSPs in and figuring out a way for them to be able to provide the services for Louisiana. Because again, I recognize, based on the discussions with the business community and that I mean, Louisiana it's a difficult state because of all the different locals. And I think what you'd find, I think you probably would be surprised, most of the states recognize, and I would agree, the big guys are collecting the tax. You're getting the Amazons, you're getting the big marketplaces, you're getting the big brick and mortars that are also selling remotely. But I think states underestimate the amount of dollars that are out there for those small to mid-sized businesses. And even though you're getting the marketplace facilitators and all the different sellers that are using them, how many of those sellers only sell on a marketplace? Almost every seller is omni-channel, right? They got their own websites, they sell on the marketplace, they may have a store somewhere, so all of that is revenue that is, I'm going to say, that's being lost in some of the states based on, again, on conversations that I have. Now, with our CSPs, just to be clear, we don't compensate every seller that uses a CSP. We only compensate those sellers if they meet what we call a Model 1 compensated seller. Typically, these are going to be people that have no physical presence in your state. They can have, under our contract, because we didn't want to get into all the different little, I'm going to call it little nexus requirements on, okay, this state uses this threshold and this one uses this one. Instead, we said, look, if they're not physically located in your state, but they've got a small amount of property or a small amount of payroll, and we use, these are, I believe, came from the MTC, the 50,000 property, 50,000 payroll, that those people can still qualify. But the bottom line is we really wanted to make sure after the Wayfair decision that those sellers that are collecting strictly because they meet or exceed your economic nexus thresholds, that they qualify, that they meet the definition. So if they're over your $100,000 threshold, they can still use a CSP and the CSP is compensated, presuming, again, that's the only activity they have in your state. They're physically there. We do not compensate the CSPs. We do not do anything with them at all. Then they, in effect, if they want to use that CSP in those states, they as the seller contract directly with the CSP, and work out a compensation plan with them. But marketplace facilitators, they can qualify. The reality is, though, most marketplace facilitators have physical presence all over. Use Amazon. They're a marketplace facilitator. They could qualify, but they've got a physical presence. They've got a warehouse in Louisiana. They can't qualify for CSP services. But one area that we have run into, which I think is interesting, is multi-level marketing companies. And you see a lot of those, and you have the independent contractor language and statutes and that. We said, look, if the multi-level marketing company itself is not physically in your state, it's only their independent reps, you can still qualify. And in the theory behind it is our states would rather get one return that covers all their reps than get 1,000 returns that each have a little bit of tax on them. Get one big return instead. It's a lot easier for processing and things like that. There is a slide here that just talks about, it kind of lays out when you're using a certified service provider, kind of the flow of the transaction. And again, I'll let you take a look at that. It's pretty self-explanatory once you follow through and look at the key as far as step 1, step 2. So I'll let you do that. Obviously, there's benefits to the sellers to use the CSP program. I think the biggest thing that we can tell sellers is they can get this at no cost in those states that are Streamlined member states, and for any of the transactions that take place in those states, because the states allow the CSP to take that 5% compensation. And that, under our contract, that's their total compensation for the transactions in that state. So they don't get 5% from the state plus charge more to the seller. Now, if the seller wants, I'm going to say, do you give them the Cadillac of the services, or do you give them I'm going to say the Chevy, like what I drive? And if, we're in effect covering the Chevrolet services. We're not covering the Cadillac. If they want the Cadillac services, they can do that, and then they have to pay the incremental amount directly to the CSPs. And we found that it's worked very well. I can tell you from a survey of the sellers that have registered through Streamline. We surveyed all of them a few years back just to get any thoughts or input or concerns. And this is one of the biggest things that they talked about, was the CSP services. Okay. See, we're getting close. So let me do this. I'm going to jump through a bunch of slides, and I'm not going to talk about the Wayfair decision at all. Hopefully you're familiar enough with that. But I want to talk about our non-member state participation option, and then also the suggestions for Louisiana, things that, from my perspective, that I would look at and say, hey, look, I think this could be a way to, for Louisiana, or some things that Louisiana could do to make it, I'm going to say, significantly easier for remote sellers to be able to comply. We'll just point out in here, if you look at these slides, there's a whole list of an identification of different things that Streamline has done. And these are things that I would certainly encourage Louisiana to take a look at as well. So we get to this non-member state participation. This is something that we put forward, and our whole goal of this, when we put this forward, was to figure out a way for the states that are not members of Streamline to be able to address, I'm going to call it point 3 in the Supreme Court's decision. So points 1 and 2, every state has addressed. No retroactive application. They put in some sort of small seller threshold. But only the Streamline states can say, they're members of Streamlined, and they've done that simplification and uniformity. And those were things that the Supreme Court specifically pointed out in their decision. And that's where it's important to understand the Supreme Court did not tell South Dakota, your law is constitutional. All the Supreme Court said was, South Dakota, your law meets the first prong of the complete auto case test, which is this 200 transactions, $100,000 of sales, that does create substantial nexus. So that gives the states the authority to I'm going to say you're subject to our tax. They didn't address, and they didn't argue, and they didn't litigate, and they didn't brief the issues dealing with undue burdens. And that part of the case got remanded back to South Dakota. And people I think there's a lot of people that don't realize that. And South Dakota and the litigants settled that. Now, from my perspective, and bless George Isaacson's heart, he settled that case. And I think that if he would have felt that he had a strong case against South Dakota for undue burdens, I think he would have pushed it. I mean, just knowing George over the years. But because he didn't, I think he recognized that, look, South Dakota's done a lot, and trying to argue undue burden is going to be very difficult. So they settled it. Unfortunately, it seems like that settlement is sealed, right? So no one really knows what what all those requirements are. But we do know, though, that they weren't willing to continue to litigate on that. So we've gone through now and listed out, and we have a model statute, and be glad to send it. It's posted on our website as well. But basically, these are the requirements if a state wants to participate as a non-member. They have to sign up and allow the use of our central registration system. It's a free system. Doesn't cost sellers to use it anything. It's all done electronically. You have to develop and post rate and jurisdiction databases. So the address, 9-digit zip, 5-digit zip databases that all of our member states put out. You have to put those out in the same format as ours. Our taxability matrix and our certificate of compliance, you fill both of those out, and the state just indicates where they're different. So the people looking at it can say, okay, Streamlined state does it like this. Louisiana is not streamlined, so they do this different. Participate in our CSP contract and the CSP certification process. So that would get those CSPs collecting for sellers shipping into your state. Some liability relief provisions. That, in effect, if the state puts out information and says this is not taxable, and then later changes its mind and says, yes, it is. If somebody's relying on the it's not taxable statement, they get liability relief until they're notified otherwise. And then paying the annual membership dues. And I can tell you our member states, our annual membership dues for the entire state run between about 22,000 is our smallest, and up to about 90,000 for our biggest. I would expect that Louisiana would fall somewhere in the middle of that for annual dues. I can also tell you that the revenue that they're receiving from Streamlined registered sellers is hundreds and thousands of times what they're paying in annual dues. Now, what we can't say, and I can't say with 100% certainty, is that the states would not get all of that revenue even if they were not members of Streamlined. So I can't put a dollar amount on it and say, here's how much you would get. What I can tell you is the easier you make it for them to comply, the more likely it is you're going to see the increases in revenue. And again, knowing what our CSPs have said as well.
Is it possible, like if the state and locals were interested in participating in the CSP contracts, would they also be able to continue to audit independently? Because I'm hearing, they're going to put a bunch of people out of work and outsource stuff that, a lot of folks are doing now.
Yeah, no, as far as what the states can do, and the states can still go in, the state still goes in and does audits. Now, the locals, would they be able to do audits separately from the state? Under if they're part of Streamline, the answer would be no. And I think that would be something that the CSPs too would push back on if you were trying to contract directly with them. And the reason for that being, they're going to code it in there. They're going to code a product in their system, and it's either going to tax or it's going to exempt. And if you've got one jurisdiction that comes in and says, we agree it's taxable, the other jurisdiction comes in and says, nope, it's exempt. Now they're setting themselves up for class action lawsuits, right? For taxing something they shouldn't. If they don't tax something and they should, they're setting themselves up for either assessment or audits by the state. So I don't believe that they would have You know, again, I don't want to speak for them, but I don't believe that they would be interested unless somehow there was some sort of, I'm going to say, protections for them in those situations. But um, so that would be my, I guess, my thoughts on that, Jay, if that helps.
I just think that's going to be a hard, hard sell to our locals in particular.
So they would be concerned with what, that the CSPs.
Well, I mean, if basically everybody has to agree to outsource, I just don't see them all agreeing to do it. I don't really see any of them agreeing to do it because right now they're kind of doing what they want and collecting. Now, if you had some great data from other states saying, yeah, but you make like, 100 times what you were making once you start using CSPs uniformly, and there was enough money there that you could show. You said it's hard to quantify, but if there was some way to show that, I suppose at some point there is a price. But just, Julie's nodding yes, she understands. Yeah.
Yeah.
Yeah, and it wouldn't be, so yeah, it would be your local jurisdictions would agree to say, hey, yeah, we want to authorize CSPs, we want to authorize them to, in effect, to represent the sellers. But it's the sellers that choose whether or not they're going to use that CSP. So if a seller says, yes, I want to use it, then that CSP will do the tax calculations. If they enter into a contract with Louisiana and all the parishes, they will do all those tax calculations to get those returns filed and get those dollars from you. They won't do the audit. Now, I thought you were asking more about, can the local parish audit the CSP?
Well, can they keep doing things their own way and also collect money over here? That's kind of
yeah.
that's kind of
Well,
what I think they want to do.
well, I think so that, how do I want to say it? I think the reality is this: somehow businesses are out there today complying, right? Including remote sellers. And it's probably costing some of them some significant dollars. There's other sellers that are saying, and our CSPs, I will tell you, they are operating in every state. They are doing tax calculations for sellers in every state. But I can also tell you that they've got some sellers that are using them that may not be collecting in Louisiana because the sellers don't want to pay Louisiana. Whereas if Louisiana says, hey, look, we'll let you keep 5% of what you remit, or whatever the agreement would be, that all of a sudden then you're going to get that revenue. It's going to be the state's going to get it, the local parishes are going to get it. So I would strongly encourage you to take a look at it. And again, I would be glad to help coordinate something. I mean, Julie, whether it's through you or whoever, to set it up with even with our whole NACSP group, as opposed to just say one of the CSPs, if you wanted to talk, to kind of talk through that with them.
Yeah, the problem in the end, it comes back to that the parish is administering it, because whatever agency is administering it in that parish is getting the windfall of that, like 5% that you would pay a CSP.
Mhm.
They're getting that percentage, and they're, obviously it doesn't cost what they're getting, probably. So they're able to finance some of the rest of their administration of that department, or that agency inside of,
Mm.
with those revenues. And that's where you're stuck, and that's where we're stuck on audits too, with you guys adopting some, fixes to situations that we can't change, like selling groceries, or there's a lot. I think there's like probably 20 exemptions at the state level that the parish has got opt-ins for. And every time we do a new one, I just cringe. But
Mhm.
we just keep doing them. We had one a couple of years back.
Yeah,
So
yeah, and I agree. I mean, that creates, additional complexities. But again, this compensation, though, these are going to be tax dollars that I'm guessing today they're getting a lot of zeros. They're getting
yeah,
nothing.
That's what I'm
And
saying. If you had data from other states
yeah,
that, you could say they went from 0 to 50 just by joining this program. Like there's some way to show there really is a lot of money out there. And that GAO study, I know you went through those slides quickly. I was
Mhm.
part of the group, so I had so many people they interviewed. but they were trying to quantify what was not being collected. It's really hard to put your hands on that, right? But I'm just
Mhm.
wondering if there are other states that are arguably somewhat similarly situated where you could say, look how much more money they're collecting because of this. And they all got that Wayfair bump, but
Mhm.
but these people got even more by using CSPs.
Right.
Yep. Yep. Yeah, and I will tell you that, and I will say I was warned by Scott Peterson, the former executive director, talked to me and he goes, states are going to want you to say, here's how much more money you will get from joining Streamline. And he said, do not do it. He goes, because if they don't get it, they're going to come back to you and say, why did you? And I will tell you that we did have a state that, they were looking at, I'm going to call it a similarly situated state to them, and similar in size, and said, okay, they asked that state directly, how much money did you generate? And they told them they expected to get at least that amount. And when they didn't initially, they were very upset about it, and now over time, it just continues to grow. I mean, we're pushing, I believe it's 10 or 11 billion dollars that have been collected through the Streamline program. We're collecting close to $2 billion a year in our member states that we know is, I'm going to call it, is money that's coming from either our CSPs or sellers that do not have physical presence. And again, we also know, and I think I can say it with some pretty strong confidence that, well, I can say with certainty because of conversations I've had directly with businesses as well, that there are businesses that are saying, states haven't found me. It's been 6 years. I'm keeping my head down. They aren't going to find me. And that's the unfortunate part, is we're trying to figure out a way to get these businesses to come forward, because many of them would like to. They'd like to get compliant, but now every day that goes by and they make transactions, that's
Yeah,
that much more liability they potentially
yeah.
have. And, even through voluntary disclosure agreements, and that's something we're starting to look at, is can we put together a program for remote sellers that will get them to come forward and start collecting, and yet not, I'm going to say, in effect, put them out of business because they had all these remote sales where they should have been collecting the
Yeah.
tax.
So I know we have to go, but I have
Yep.
conversations with that like every couple of weeks. There'll be somebody, talk to Jay. What do we do now that they just found out about Wayfair somehow? And they're usually medium-sized businesses. They got a great idea. They're selling over the internet like crazy. Somebody said to them, hey, you need to look into this. They talked to me and I kind of explain what a mess it is.
Yep.
And then they're
Yep.
like, well, we'll get back to you, because they
Yeah.
do, we always, and a few of them will do that risk analysis. Look at where you have the most exposure and let's address those first and then watch
Hmm.
everything else. And we've done that for some of them, but the other, quite a few of them are saying, this is not what we wanted to hear. We
Right.
wanted to
Right.
hear there's still a physical presence or there's something. And it really is, it's
Yeah.
unfortunate because, at some point they're going to get on somebody's radar and they're going to get caught. Which
Well,
would be
and
expensive.
I think too, you're going to see the states doing more and more information sharing. I think back, and I'm going to put my auditor hat back on from when I was with Wisconsin. That's when I started. And, we used to, and we had exchange agreements with various states, and we did some exchanging of information saying, hey, look, this seller, we know they're selling into your state. They're driving their own trucks in there. They should be collecting your tax. We know they're not. We're not getting tax on it because they're telling us they're delivering it to your state. Therefore, you're entitled to it, blah, blah, blah. Well, that same thing is going to be happening more and more, I think, with remote sellers, because states are going to try to figure out a way to work together. And I don't want to be, I want to find a way to be able to help these sellers come forward, so that, I'm going to say, so they can sleep at night. They don't have to worry about, okay, is Louisiana knocking at my door? Is Wisconsin? Is Minnesota? Who is it? Um, Without putting them out of business. Because if you just hand them a big bill and they say, I'm closing my door, that does nobody any good. The state where they
Yep.
were physically located just lost a seller, and all the other states where they had that product, they've now lost that seller. And a lot of these people, they want to come forward, but they're concerned what those back liabilities are. So we want to try to find and figure out a program um, that will help address some of that.
Well, we really appreciate you sharing your time and your slides with us today. I think it's a super interesting to understand how Louisiana would have to change and just how much change would have to happen and how complex that is to get through a legislature when you're, you're flying in the face of your local governments, and your local governments, all the people around you as elected officials are the ones that can, really tempt fate with the office that you hold.
Sure.
It becomes a tough sell, and there's just those two things. It's administration. Um, we tried to put that up for a constitutional vote a couple of years ago, as I'm sure you're aware, and it did not pass. And then there's just having the same tax base for everything, which is, another big complication of Louisiana. But we really appreciate it. And I'm betting that Jay and I will be back to you with questions.
Okay.
And
No.
as we meet with other people, for sure.
Sure, sure. No, I'm glad to do it. And one person that I think I might want to try to hook you up with, and you guys can talk about it and then let me know. She's on my staff, Christy Comanita. She was with the state of Arizona for almost 30 years, and she's been working for us now for the last 5 or so. But she was there when Arizona went from the locals being all kind of self-administered to having it state administered. And I'm going to call it's a success story. I mean, the locals realized the benefits they got out of it, and maybe having her talk, and maybe even figuring out a way to get some of your, more of your locals involved in that conversation,
Yeah.
and connected with some of the folks in Arizona, I think could be very helpful in that, because I think that is a big piece. Is
Yeah.
getting the locals to be able to say, okay, yeah, we're okay with having, and the thing is, it doesn't have to be state administered. You could have call it a neutral third party administer both the state and the local if you needed to, if that would be
Like,
I'm going to say a better situation.
Remote sellers.
like, or the uniform local sales tax board. I mean,
Yeah.
some combination thereof. Yeah,
Yep.
I agree. And you're right. The minute you said Arizona, it's like that was the other one. Because I remember that, back when I was working on this, Arizona was still all split up and doing business kind of like we did it. We still do it. So
Yep.
that's a great idea. And we just may get in touch with her. I don't know how.
Yeah,
she
let me
did
know.
it. Somehow
I'm
you have to
glad
get them the money.
Yeah, that's what it is, right? Show it.
To what it is.
So,
All right.
okay.
Well, thank you so much. We really appreciate your time, and Jay for connecting us. And we'll keep you posted, and you keep us posted as we watch what Louisiana attempts to do in the spring. I can't wait. It's always
Okay. Yep.
it's
If there's
always
anything I can do, please let me know. I'm glad to help. And if you need some input from some business folks as well that we work with, let me know. I'm glad to help line up those and coordinate those conversations as well.
all right, my friends. Well, I appreciate you guys so much, and I'm sure you haven't seen the last of us.
Yeah, hey, that's good to hear. And again, let me know if there's anything I can do to help.
All right. Thank you, Craig.
All right. Thank you.
All right.
Bye
Bye
now.
now.